Internal Revenue Service IRS tax news. IRS reminds taxpayers of the home office deduction rules during Small Business Week. IR 2020-220, September 23rd, 2020, Washington. During Small Business Week, there's a link to Small Business Week here, September 22nd to the 24th, the Internal Revenue Service wants individuals to consider taking the home office deduction if they qualify. The benefit may allow taxpayers working from home to deduct certain expenses on their tax return. Now, there's probably more people that are filing as a small business or need a Schedule C in some way, shape, or form this year, considering the circumstances, meaning you might have more people that are taking on side jobs where they might be picking up a side income or have multiple different jobs or doing different things during the year, or possibly moving on to some business work. If you're doing something where you're getting paid and you got to report that income on, say, a Schedule C, which is going to be your business income, that's when you would be most likely eligible for possibly a small business deduction for the home office, the use of the home office. So if you're using a home office, then you want to consider taking that deduction, which could allow you possibly to take part of either the rent on your place, on your home, or part of the utilities on the home and whatnot as the use of a business deduction. The idea being that you're using those things that are typically home or personal now for business, and the typical rule for deducting something on the taxes is whether it's for business use or not. So in other words, if you have a business and you're using something in order to help you to generate revenue, then that would be the general rule for a business deduction to be deductible. And some of those things that would have been personal before, like the utility bill and possibly some repairs on the place and whatnot, may now be qualified as a business deduction. And so you want to be making sure you're considering that option, because it can't be significant if you now have a small business or typically are reporting something on typically a Schedule C type of form for an individual sole proprietor type of business. So the home office deduction is available to qualifying self-employed taxpayers, independent contractors, and those working in the gig economy. However, the Tax Cut and Jobs Act, there's a link to that here, suspended the business use of home deduction from 2018 through 2025 for employees. So if you're an employee, you might say, hey, look, I'm still using my home. I'm using my home office. I'm working from home. More people are working from home at this point. Can I take the deduction if I'm an employee? Meaning, most of the time that would mean if you're getting a W-2 income, if you're getting your income reported on a W-2, then you're basically an employee, and then you typically cannot take the deduction here. Now, before the Tax Cut and Jobs Act, there were rules that you were more likely to be able to take it, although they were more stringent types of rules even at that time. But typically, if you're an employee, you don't really have the deduction. If you have a business, then you may be eligible for the business deduction for the use of the home office. So employees who receive a paycheck or W-2 exclusively from an employer are not eligible for the deduction, even if they are currently working from home. Qualifying for a deduction. There are two basic requirements to qualify for the deduction. The taxpayer needs to use a portion of the home exclusively for conducting business on a regular basis, and the home must be the taxpayer's principal place of business. So those are the two items that you want to basically have. If you were to get audited on this type of thing, the idea would be that you'd want to be able to prove, hey, this is a piece of my home. This is what I typically use regularly for business. And you want to mainly say, hey, this is a business use area. So if you're talking about, for example, your living room or something like that, where you spend a substantial amount of time on business and personal, probably not gonna cut it, right? But if you have an office that you cut out specifically for the use of the business, then that is more likely something that's going to be qualifying. Now, how could you then think about taking the deduction? There's a couple different ways that you can get into actually calculating the deduction, but if you think about it, one of the ways you would do it is you take the proportion of the place that is your business use place, that would be your office, your home office, and then you can compare that to the entire property or the entire home. You could do that on a square footage basis, and there's a simpler method that IRS can offer as well. But in concept, you can see what the idea would be. You want to take the ratio of the place that you have. You could take the square footage of your room and then divided by the total square footage, and then multiply that ratio times the deductions that may qualify, such as the rent or the utilities and so on and so forth. So qualifying for the deduction, okay, to claim the deduction, a taxpayer must use part of their home for one of the following, exclusively and regularly as a principal place of business for a trade or business, exclusively and regularly as a place where patients, clients, or customers are met in the normal course of a trade or business, as a separate structure that's not attached to home that is used exclusively and regularly in connection with a trade or business. So meaning, in other words, you can have part of the home that you are in that basically you've carved out for business use. You can also have something outside the home, possibly a garage or something that is outside the home that you use exclusively for business use that is obviously part of the home property. On a regular basis for storage of inventory or product samples used in a trade or business of selling products at retail or wholesale for rental use as a daycare facility. Now, the daycare facilities have got some specialized, a little bit more tricky sometimes when you look at the daycare facility. So you want to make sure you're looking up what the tax rules are for a daycare facility. The term home, quote and end quote, for purposes of this deduction includes a house, apartment, condominium, mobile home, boat, or similar property. So it's pretty expansive in terms of what is a home. If you're living in it, it seems to be a home, right? An apartment, condominium, mobile home, boat, or similar property. So it includes structures on a property like an unattached garage, studio, barn, or greenhouse. So if you have an unattached kind of thing out there, that would be included in the home. And if you're using that unattached thing like a garage or a greenhouse or barn for the purposes of business, then you may be able to use it for this deduction. Doesn't include any part of the taxpayer's property used exclusively as a hotel, motel, or inn or similar business. So if you got a hotel, motel, inn, then you gotta take a look at some the rules exclusively to that kind of industry. Qualified expenses, deductible expenses. There's a link to that here. For business use of home, normally includes the business portion of the real estate taxes, mortgage interest, rent, casualty losses, utilities, insurance, depreciation, maintenance, and repairs. So let's go through that a little bit more exclusively. So what can you deduct on this home office? Well, so you've got your portion of the real estate taxes. So remember what you're thinking of. You're thinking of, okay, I got this one piece of the home, and if I compare that in a ratio, like a square footage, the home compared to the square footage of the entire house, I now have a percentage, let's say 20%, that I'm going to say, or maybe even 20% I'm going to say is the office. Then I could say, okay, now these things that are on the whole home that were personal, 20% of them are now basically going to be business deductions. That's kind of the concept that you would think. So real estate taxes, because you're paying taxes on the home, real estate taxes. If you own the home, if you rent the home, then you're paying rent, right? But the real estate taxes, just also note that's a little bit tricky because you may already be deducting them on the Schedule A itemized deductions. So it might be more beneficial to deduct them here in some cases and whatnot. But just realize that with the fact of the real estate deductions, you've got that you're kind of splitting them or pulling them away from the deduction on the Schedule A, so it might not give you as much of a benefit as you had originally thought. Same with the mortgage interest. So if you own the home, you're paying interest on the loan that you have. If you have a loan, most people have a loan that they'll purchase a home with, and they're going to pay interest on it. That would normally be personal, but now you can say, well, part of that mortgage interest is like a business deduction. Again, it might not be as big a benefit as you would have thought because it's already deductible on the Schedule A. So it still could be a benefit. It's worth going through, but just realize you gotta piece those two out between the Schedule A itemized deductions, and the mortgage interest and the real estate are usually the two things that push people over to being able to itemize rather than taking a standard deduction. Now, if you rent the home, if you rent your place, then you kind of get a bigger hit here because renters don't get this itemized deductions for mortgage interest and real estate taxes. The rent that they pay, if it's just personal, they don't get any benefit for it. Unlike people that own the home, they get these real estate taxes and the interest are deductible. But if you use the home as your business for some part of it, then that could be significant, right? So the rent is kind of be a big expense, and if you could deduct part of the rent, that would be quite significant for many people. So you want to definitely take a look at that. And then casualty losses, if there's casualty losses, the other common thing would be the utilities. Obviously, you're paying utilities on the whole home. Normally, they would be personal, but now the utilities part of them, the ratio of them, 20%, we're going to say in our little example here, would be for the use of the business. Insurance on the home, same kind of concept. Now, depreciation is another one that's a little bit tricky, because notice that when you have the home itself, if you purchase the home, if you own the home, now you have the property, but it's usually personal. Therefore, you don't depreciate it. Right? You don't depreciate it because you don't have a depreciation expense. But now, if you're using part of it for business, then you'd think that you could put it on the books and depreciate part of it. Now, again, that gets a little bit more confusing because it could affect the basis when you sell the home and whatnot. But just note that, that could be significant too. This one can be a little bit more tricky to kind of figure, though. And then we got the maintenance. If there's maintenance or repairs on the home, again, if you repaired something for the general home and the whole home, like the roof or something like that, then you would do the same ratio. If you repaired like the living room and your office isn't the living room, then you would think, no, you don't get the deduction. I mean, if you repaired the living room, because that's not part of the home office, but if you repaired the roof to the whole house, then you would think you would get that. Now, if you repaired the home office itself, then you should deduct probably the whole thing, right? Because you shouldn't take the ratio, because now the deduction is itself to the office. Okay, so that's just a general recap. So in general, a taxpayer may not deduct expenses for the parts of their home not used for business. For example, expenses for a lawn care or painting a room not used for the business. So for those repairs and maintenance, if the lawn is outside, it's not really a business thing. And more specifically, if you painted the living room and you're not in the living room for work, then you shouldn't take the ratio, the 20% of the living room, because that's not part of the business. Okay, claiming the deduction. A taxpayer can use either the regular or simplified method. So there's two methods that you can use now, regular method, simplified method. There's a link to those here to figure the home office deduction. Using the regular method, qualifying taxpayers compute the business use of a home deduction by dividing expenses of the operating the home between personal and business use. Self-employed individuals filing IRS Schedule C, profit and loss from business sole proprietorship, first figure this deduction on Form 8829. There's a link to that here. That's the expenses for business use of your home form. And oftentimes this kind of ratio would be done, like we say, with the square footage is a common kind of way to get the percentage of the place that you are using for business usage. Using the simplified option, qualifying taxpayers use a prescribed rate of $5 per square foot of the portion of the home used for business, up to a maximum of 300 square feet to figure the business use of the home deduction. So you can use the square footage. I mean, you can use this kind of general rule of the $5 per square foot. Now, you might want to obviously do this both ways, because when you do the calculation, it could be more beneficial to do the old way, or the primary, or the way where you do the ratio, or it might be more beneficial to use this $5. I would think that if you're in an area where the cost of living is higher, where the rent is high, then you probably want to do the square footage, because the $5, the IRS is blanketing that over the whole country. And so that means that you would think that would be like an average for the whole country. So if you live in part of the country where the cost of living is higher, the rent is high, then you would think that that might be too low of an estimate, and you might want to do the actual kind of proportional calculation. And if you're living in an area where that your rent is good, like lower than the norm for the country, then you might want to take the $5 one, because it might be beneficial at that case. That's just a general assumption, but you should probably calculate both ways now and see which one is the best. So a taxpayer claims a deduction directly on the IRS Schedule C, Revenue Procedure 2013-13. There's a link to that here. Provides complete details on this safe harbor method. Daycare facilities. Now, daycare facilities, there's a lot of those these days. You could. They have kind of special rules for the daycare facility, so make sure you're checking out the special rules for the daycare. So taxpayers who use their home as a regular basis for providing daycare may be able to claim a deduction for part of the home, even if it is used as the same specific non-business purposes. So daycare facilities probably have kids, running around the whole living room and whatnot, and then obviously once the day is over, you're using that same space for personal use. Now that wouldn't normally qualify under normal business use purposes, but maybe you can get an exception for the daycare given the specific needs of a daycare type facility. To qualify, both the following requirements must be met. The business must provide daycare for children, people age 65 or older, or people who are physically or mentally unable to care for themselves. The business must have applied for, been granted, or be exempt from having a license, certification, registration, or approval as a daycare center or as a family or group daycare home under the state law. So then there's some additional resources, including Publication 587, Business Use of Home, including use of daycare providers, and Form 8829, Expenses for Business Use of Your Home. There's links to those items here. There'll be links to this in the description.